Hey, Jeffrey Scott here. This is my Market MRI Pro update for Thursday, August 14th, 2025. This will be a little shorter tonight. I've got an early flight, 6 a.m. flight, East Coast tomorrow. So I got to go to bed soon. You know, I was thinking of a title for today and I came up with it could have been worse. And maybe it should have been worse. This market was extended. We've had the Hindenburg Omens. It's rallying because people think we're about to go into a rate cut, which probably will. We've got people talking that it should be 50 basis points. Treasurer probably won't. And then today we get a hot PPI. Every reason for the market to sell off. And I looked at the futures and they were down, but really not that much. I looked at my account. Thank God Amazon's quite a big piece of my account. My account was up. And then the market started to rebound. And despite bad news, the market finished relatively flat on the day. So, if you're watching a technical pattern and you're expecting it to go one way and it fails to do what you think it should do and it goes the other way, that tells you something. I wonder if the same thing is there. And maybe this market is just so resilient, it's just going to go to the moon. We'll see. Again, my name is Jeffrey Scott. My email address is marketmripro@gmail.com. And my Google group is called Top Down Trader. If you're new to my channel, please hit the subscribe, hit the alarm, and you'll get notified when I post these. And even think about joining my Top Down Trader group, which I'll talk about. This is for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate how I use my tools for top-down investing. You and you alone are solely responsible for any investment decisions you make. You should always consult with your financial advisors. And I use my tool on these videos. I have my indicator and scanner inside Wealth Charts. I'm soon to launch inside Metastock. I've got tools for TradeStation, but I trade exactly the same whichever program you use. I put my top-down trader group together because I wanted a place for the people who bought my stuff to gather and interact. I also wanted to have a place that I could reach out to people. I hate having an email list because after a while, they think you are spam. So all you got to do is go to Google Group, sign in, go to all groups, search for Top Down Trader, and tell me how you want to be notified. It's free. You get discounts on my products. You'll get videos that I don't post on YouTube and invites to closed educational programs online. Speaking of education, I've got my annual Florida meeting, Palm Beach Gardens, October 27th and 28th. It's a little earlier this year, but John Person's having his meeting the 25th and 26th. We share a lot of customers. He's got a lot bigger customer base than I do. And I thought for the people that wanted to go to both, it'd save you on airfare. Separate fee for the meetings. His is at the Palm Beach Gardens Hilton. It's 2 minutes away from the full service Marriott, which I chose. If you've attended my events before, you know I go all out. We'll spend all day and night together on Sunday. I'll take you out on my boat. For dinner, I'll feed you breakfast and lunch both days during the meeting. And if we have enough people that want to go out Monday night, we'll go out for something casual. So there's still seats available. There's an online option. Again, you get $40 rebate towards any tools you buy in any platform from me. And for more information, just reach out to me at marketmripro@gmail.com. Well, Thursday, I talked about the PPI. We also had the jobless claims. Look, if the Fed doesn't want to cut in September, they have reason to. But we also have another CPI and PPI before we get to on that meeting. So potentially that'll cool off. Earnings on Thursday were great. I mean, we had a number of things with some modest sell-offs. And the futures, the NASDAQ is lower as we speak and probably being driven by Applied Materials. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. I think we start to slow a little bit after this week, maybe another week with a lot. And you can see not much coming on Friday. I built this index in early June at my live meeting. Well, not my live meeting, at the Orange County live meeting, which I sort of taken over. Um, I enjoyed that meeting and talked about how the market was, was in a nice uptrend, didn't know how far it would go. Let's build a list of leaders and then create a synthetic index with the knowledge that when that leader list fell over, it would be time to get out of the market. Well, we're about to fall over. I mean, I thought we would bounce. We're sitting right on the 50. We had a mobile breakout to the downside and a bongo, a trending indicator switch to bearish. So we'll see if we break. We, of course, anything can happen. Tomorrow's options expiration day. We'll see what we get tomorrow. And then before the open, we got mixed news. We got retail sales. We got import prices. That'll be interesting to see because of the influence of tariffs. And then we have some consumer sentiment and a lot of unhappy people out there. So we'll see what happens. All right. If you have any questions, technical about the program, coding at marketmripro.com will get you Praveen, who is my friend, partner, and programmer extraordinaire. And if you have questions about functionality, if you want to purchase it, you have pricing information, marketmripro@gmail.com. I think I have a very sensible way of how I price it. It is expensive. It's a full-fledged program with everything you need to be a top-down trader and more. And I priced it as a full-fledged program, not as a indicator. But if you're the top-down trader group, you get $100 off. You come to my live meeting, you get $400 off. And if you bought my tools in TradeStation or in Wealth Charts, you get $200 off for each of them. So you can bring it down considerably. And then that's for the first year. And then there's a much lower fee annually to support updates and data. I hate to say what somebody else says, got one thing, I'll copy it. I've just begun what I'm going to do with this program. We're going to launch a bunch more of scans in the next couple of weeks, hopefully quicker. I've got a new trading system I'm putting in there, and I'm going to continue to add stuff. And once you purchase it, you're entitled to everything that I put in that's related to me. We're going to bring our first educator add-on, which will be John Persons, hopefully soon. It's done and it's awesome. It'd be sold by him, priced by him. And so hopefully we'll iron that out over the next couple of weeks. And I'm talking to others as well. So I'm very excited about this platform. On to the charts. So let's start with where we started today. And this is called the daily brief. And I was watching it all day today, and all I got to do is click this during the day and count to about 6, and it refreshes. And let's just look at from the top down strength. So volatility was up a little bit, but notice it was down at the bottom part of its range. That meant volatility came down. The dollar was up 0.37. That's not great for equities. The spider was flat. The diamonds and Qs, to me, they were all flat. And they were at the top part, at least the diamonds and the spiders at the range, the Qs in the middle. The Russell was down 1.3. It was down at one point during the day over 2% and closed at the higher part of its range. And Bitcoin was down 4%, and that was painful. If we look at the new high, new lows, well, the new highs kind of dropped a lot, not a big increase in the new lows. And you could see that the new highs minus new lows for the NYSE and the NASDAQ remain positive. This is an interesting number here. In the S&P 1500, only 19% of the stocks were up. And these are the biggest 1,500 stocks in the market. The S&P 500, then the 400 mid caps, and the 600 small caps. These are not necessarily junk stocks. Only 19% were up. The NASDAQ, 31% were up. Clearly, NASDAQ led on the day. even though it was down a bit. Big cap tech, Amazon specifically, and then NYSE only 25% of stocks were up. It's hard to make money to the long side if you are a slow swing trader, meaning I hold positions for a while, um, unless you happen to have the one or two stocks that are leading. And sometimes that's just good stock picking or just luck. If you look at 1 day change, you can see healthcare is rebounding. United Healthcare, contrarian play, coming up. Financials, both up about 0.5%. Communications 0.08, and then it drops off. Technology was down 0.21 today. Materials led to the downside, -1%. Staples 0.9, industrials just under 0.9, real estate down 0.7. When I look at 1 day themes, MLP and energy was number one, followed by semiconductors, blockchain, but these are pitiful, minuscule gains. So tough day in the market. If we look at my timing model, it wasn't tough enough to change anything. We are now green across the spiders, the Qs, the Russell, and the diamonds. And we're in nice uptrends. You look at the day we had today, you had a indecision bar on Wednesday, and we opened considerably lower, and that looked like it could have been the beginning of something bad, but we closed relatively unchanged. That was the spider. The Qs, we opened lower, tried to rally, and finished down on the session. Again, not a big down day. You look at the Russell closed a big gap. I mean, this was yesterday's gap up and run, and we opened at the bottom of that candle, traded all the way down, filling the gap, and bounced. Finished down, but well off the lows. And then the diamond, sort of an inside day. So we've got stalling action here, and the question is, will it turn into something else? We look at the weeklies, and you can see they're all long. So based upon my timing model, I have to be facing long. I've got enough concerns of this market that I am not all in. And but I've got a lot of cash ready to deploy when I think it's the right time. Hard to be super bearish when you see this week we set all-time high on the spiders, all-time highs on the Qs, and we're getting very close on the diamonds. Hard to be bearish. Now, markets don't go up forever, and I certainly expect that we're close to correction time. We had the Hindenburg Omens, only 1 out of 4 times. Does that mean a big correction? And hence why I've raised some cash, and why a lot of people I know are all in cash because of their concerns. But boy, if I did that, I would have missed a lot of rally. Here's the weekly spider. Let's go to daily charts. You could see off the bottom, we just had a massive rally. And if you look at where we are right now, set an all-time high intraday and closing on Wednesday. Since the spiders were down, we're up 0.01 today. I guess we have an all-time closing high today. So again, how bearish can you be at all-time highs? Again, Hindenburg's, divergences, all those concerns are real, and seasonality, that is mostly sideways. We have a number of areas around here of support, and it would not be horrible. It would not be the end to see this pull back. And this down to here is only about 4 to 5%. So would it shock me to pull back? No. I thought we might be range bound between what was a prior high and this high, but we broke out. So it'd be interesting to see what happens. If I look at the Qs, not as strong of a day. All-time highs yesterday, also has sideways seasonality. So maybe a little bit more risky looking. High jump bar is at 86. So do I think it's going to go up forever? No. Do I think we probably have a mild correction coming? Yes. But again, a pullback to here, 4%, not a big pullback. And that would be the first line of support. The diamonds, well, I'll wait to see if the diamonds can figure out how to set an all-time high. And here it is. I have to go back far enough. We are close. Probably have to push it up a little further for intraday highs. We are so close. I bet we hit it probably next week. But I still think that this market is at risk of a modest correction, and a pullback down to the 50 is not a big move. That's 437. We closed at 449. It's 3%. Pull down to the 200 at 429. 429. Actually, it's even less percent. 429 from 438. Nah, the close was 450 to 425, 5 to 6%. None of these would mean the rally's over. So we've been spoiled, kids, folks. I'm probably older than most of you. The Russell has not come close to an all-time high. It's holding above this trend line. Hopefully this turns into support. It's had a massive run. It gave back a little bit today, but as I mentioned before, very impressive on how it recovered. At least it was to me. Volatility moved up a tad, 2.35% on the day. Still low in its place. When the VIX is low, George Lee used to say, look out below. When the VIX is high, it's time to buy. The VIX is kind of low, although it can stay low for a long time. And then the other thing that I've been watching closely is the dollar, recognizing that if the dollar spikes, it's probably bad for the markets. We had a big run up here. We broke back down. We failed here. We're sort of in the middle of this attempted recovery, and we were up significantly today after 3 days pulling back. It's worth watching, and strong dollar is probably not great for my stocks. On the commodities front, they also don't love strong dollars. You can see gold was down 0.63. Silver was also down here, 1.43. Oil living on the 200 was up less than 2%. And a big turn. This data really spooked the rates. And these are futures, so they actually trade before the market opened and before the number came out. So they opened lower going into the PPI, and they closed much higher. So 1.2 something percent, 1.1% rises. We're still below 5, but rising rates, rising dollars is not an ingredient for a great market. I thought the buckets were amazing. We talked yesterday that we had 14%, 16%, 18%, and 10% of the stocks in the respective industries trading above their upper Bollinger Band. I called out that was a danger sign, but it can get a lot worse. Well, look what happened. They dropped significantly. Why? Because it was a bad day in the market. 3 out of 4 stocks, for the most part, were down, and the market shifted down in their Bollinger Bands. So we took away one of the pressures that I thought was a short-term risk in the market. If we look at market breadth, here's my 2 Hindenburg Omens. We've got confirmed Hindies. Here's the NYSE, not much damage today, inside bar. Here's the NASDAQ composite, just like the Q's open lower and closed higher. The fact that it's red means it was down just a bit of the composite. And you could see down here, stocks above the 50 in white, 17 in green, and 200 in red, tick down a little bit. But these are in the middle of the pattern. When it gets up here, it's when the market says time to pull back some. When it gets down here, it's time to recover. We're neutral. And if I look at new high, new lows, we're positive. AD lines were negative, and up-down volume was negative. So it's a weaker day. And maybe it was weak enough to burn off some of my concerns. One of my big concerns was this green line here, where yesterday we had 95% of 13-week new highs versus new lows. And typically that gets us to a level that the markets reverse or gets you close. Well, you could see today's action was enough to bring it down to the 80%, 81% on the spider, much lower on the NASDAQ. Looks like it's about 61. On the S&P 500, it's 0.83, and on the Russell, 0.81. So that just took that pressure away as well. So the good news about today, it was a churning day. There was rotation today. no damage to the indexes, and we burnt off a lot of our excesses. Maybe that's good. Could be. All right. So my thoughts on the market is options expiration is going to be wild. Should be lots of volume. I will close out some positions. I still have some things I like Walmart, Lennar, which got a bump after hours because of Berkshire Hathaway's holdings. I have a position in, let's see, Oracle that I'll be keeping in Hood. Some of the stocks that have been doing well of late, but I'm going to end up cashing out some because I've got some option spreads where they're already deep in the money on both ends. So they'll be called away and I'll put cash in my account, which I'm fine with. Do I think we're going to go lower? I think we're going to have a leg lower. September is going to has got all the makings of being weak, and everybody's expecting the rate cut to come in and save the markets. The markets don't need savings. They're at all-time highs. I think it might be a buy the rumor, sell the news. Just a thought. If I look at the ratio charts, it gives me a sense of where the strength is. And these are all ratio charts compared to the spider. You can see Bitcoin weakened some. You can see tech's been strong, but is it rolling over? You can see healthcare, which has been weak, is coming up. Interestingly, you don't see that in staples, in utilities, or real estate. So healthcare has been following those, but it's looking different. Financials had a big day today. You could see they've turned up. Materials is kind of schizophrenic. And then the other thing that's turned up some is discretionary and communication. So you have your stronger actors, and then you have XLP, XLI, XLU, XLR that are lagging. A few weeks ago, we talked about the nuclear stocks. They're not as hot right now. I hope you were like me and you played LEU, a little while, enjoyed the run, and then realized it's way too volatile to hold. Because that one, what a ride that was, and hopefully you got out before it broke down the last couple of days. And the other one was OKLO, which was a great ride, which I got rid of. I played it okay, made some money on it, but to me, it looks like it's had its run, at least for now. So let's go take a look at the timing model, not the timing model, rather the JAS layout. And in the next 5 or 10 minutes, just look at some stocks. So when you open the program, you'll go right to my impulse list. This includes everything in the NYSE, the NASDAQ, the Amex, filtered for $1 and 100,000 shares, just to get rid of the crap that's not trading. I don't remember the last time we were above 3,800 stocks. It's been a strong market. All right. Now, every one of these stocks has got a sector and an industry group, every one in the data set. So I can create my own sector and industry top-down analysis, and we did. So if you go to top-down, it shows you the sectors. And for example, communications has 177 stocks in it. So what I like to do is I like to, since today was a weird day, we're going to do it differently. Let's take 2-day momentum and let's go the top 3: communications, healthcare, and financial services were the top 3 in 2-day momentum. These are the industry groups that are in those 3 sectors. So let's look at them for 2-day momentum. There we go. And I did the wrong one. I want to do percentage. And now I want 2-day momentum. I'm sorry. Now you notice that when I did that, there's not a lot that are positive. Well, wait a second. I can't say that, can I? Let me go over here. Okay, these are the ones that had the best 2-day momentum. So what I'm going to do is I am going to click on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'm not a fan of SPACs. So I'm going to kill that and open up this one. All right, so I've got 187 stocks that are the top industry groups in the top sectors. Now what I'm going to do is I'm going to go into this filter and filter $5 and 500,000 shares, pick one of my trading systems, pullbacks and uptrends, and that's going to bring me to 52 stocks. And then I'm going to look at my impulses, which are my bullish and bearish signs that I help to find stocks that are actually starting to move. And I'm going to start looking at some of these. Sonoma Pharmaceuticals, big move, don't know anything about it. Pharma companies will move on news for many reasons. So they launched a diaper rash product in Walmart and other US chains. Okay, not that exciting news to me. I'm looking for new cancer drugs. And you look at earnings here, nice earnings growth, but it still loses money. It did have a surprise. Earnings came out the 7th, took a few days to react. Not that exciting, in my opinion. GRFS, Grifols, they do a lot of the plasma-based products. It's a beautiful uptrend. Healthcare is starting to move. It's moved, however, from 6 to 10 in the last couple of months. If we look at earnings, it's making money. It's got, wow, 728 and 850% earnings growth. That was a negative surprise. Revenue growth also very strong. Doesn't pay a dividend, but when you see earnings per share growth that looks like this and a multiple that's much lower, I find that one to be interesting. So I might think about that one, and that might be one I might want to look at. How about Riley? I don't know what this one is. Let's see what it is. Hello. Financial services. Well, this thing's been dead for a long time. And is it going into a Weinstein? Did it change stages? And is it about to go into a stage 2 uptrend? Kind of looks like it. Does it make money? Doesn't have any data. All right. How about news? Business call update. Now, if I was truly interested in this stock, here's your earnings came out on the 13th. So they're behind. If I was truly interested, and I'm not, I would click on that link and it would bring up the article and I could read about it and understand what they do and why it's going higher. HROW, Hero Health. I like the pattern, kind of a cuppy looking bottom, a handle and a breakout. I'm sure I'm oversaying it there, but that one looks interesting to me. Down here, we show the relative strength breaking out over the moving average. We see OBV breaking out over the moving average. Big, strong day. Let's look at when earnings were. If I move, it'll go away. If I click on it, it will stay. Earnings were the 11th, big growth rate, negative surprise, but a big growth rate. Ultimately, that's what matters. Interesting how they had one bad one in between the last two. They're projecting a 12-cent gain versus a 12-cent loss. That's kind of interesting with a pickup in revenue. No dividend, wouldn't expect. That's an interesting looking chart. BBNX, Beta Bionics, IPO. Viatris. This was a spinoff from Baxter with their generics and their biosimilars. Healthcare is starting to move. We saw ANI over the weekend, which would be in the same space, and a breakout over the 200. Let's see earnings. I love how everything I need and I like is sitting right here. And 62 is going to go against 75. That's not so good. And the revenue's up, is growing, but it's got a negative growth rate. So I'm not that excited by the fundamentals. SHC, but remember the market's moving on momentum here. RadNet, another one whose earnings just came out, and it had today momentum, a breakout, actually back here. Today it just had big volume, but this one is a big change. Look at all the volume that's come in. So one thing I like to do is I like to just go through the top 10 or 15 stocks. So I know in those sectors that are leading the market, in those industry groups that are in those sectors, which ones are the best. That's top down. That's how I trade. And not only do you have the benefit of finding good chart patterns and strong stocks, but when the group is going up as well, you have the benefit that the wind's at your back, especially if the market is strong. If you go back to the impulse view, one more thing before I say goodnight, I'm going to go back into my scan. Actually, let's reset it. And now I'm going to filter for something else. I like price minimum of 5 and 500. I want to be above the 200. I want the weekly bongo, which is my weekly trender, to be up. Why? Because we've been in an uptrend for a while. I don't want something that's been in a downtrend. And here's my favorite of my test scans, 2-day momentum up. Let's take a look at these and then we'll say goodnight. Abio. What I have found is a lot of times when after a stock has a big move up, big move up, it trades back. Big move up, it trades back before the next move up. Move up, it trades back. But when I get a stock that has enough strength that it trades up, a big move up here, see this blue dot? That's a momentum dot. And a big momentum move the next day, typically these stocks are strong. And if they pull back some, they'll give you a little flag and they'll go higher. Those that have watched me over the last year have heard that this is my go-to setup. So Abio is a healthcare stock. I don't know anything about it. Does not make money, doesn't make much revenue. So it's a story stock about what it's developing. You could check the news if you want to hear what's going on. Novel cell gene therapy, access to treatment for rare diseases. Rare diseases, and their drug is now available, have great pricing power. No one says no. CXDO, Communication Services. This is what I call loose, and it's a cheap stock, and it's just, it's in a slight uptrend. You had the two momentums, breakout and a volume bar. This is another, these two up here are other trading systems. Relative strength is good. OBV is good. Again, I do the same math. I look at my earnings. They came out August 5th, making money with good earnings per share growth. And when it looks at the growth, it's not comparing it to the prior quarter. It's looking back to this quarter. So this is going to be compared to 6 cents. So that's 25% growth. So it's got growth. And the revenue, you can see it's growing here. All right. DLO, which was on the list yesterday, actually on one of my lists that we looked at. But look at the move. Massive breakout today. Here's your two dots. This one looks great. I'd have to do some math and figure out if it's gone too far. Up here is what I call my high jump, which measures extension. And when it's at 100, it tells me this thing is extended. And what you see at other times when it gets up high, it has a tendency to stall out, go sideways or reverse. So this one looks super strong. It's just kind of at an area, massive volume, where I'd expect a reversal. And what was the cause? Earnings with a surprise, revenue with a surprise. Okay. NVRI. Again, I don't know this company from Adam, Envery Corporation, but this is where I found Lou and OKLO by looking at this simple scan. Again, I'm looking at these two dots. I mean, this one looks interesting too. NWS, News Corporation. Riley is one we already saw. VIPS, well, this used to be a super expensive stock. Chinese stock, I think of this as a online buying. VIPS breaking out here. Did it just have earnings? Earnings today? Yep. Big, little surprise on earnings. Not much growth on revenue, but it beat somebody's expectations. And I don't like the earnings per share growth and the revenue picture, but it had a big move today. I look to find stuff that I like. And Wolf is interesting because they announced a big deal today with Google. Google investment to build the largest data center campus in the US. You really think this is going to be a one-day wonder? I'll tell you the part that I want to know. Let's see, earnings, I think, came out today. No, they came out on the 8th. There's nothing good here. Who knew about this on this day? And why did we have the same signal yesterday? 3 out of 4 days with these blue dots, obviously insiders knew what was going on and somebody was buying the stock. I'm not saying anything nefarious. With all the moving averages coming together, I'm not going to pay attention to the high-low jump. This is probably the stock I like the best. I'm going to look at this one. I'll probably build a plan around it. And if it opens up tomorrow, I may be interested in taking a little snippet. But my investment needs and my bank account are probably very different than yours. So just because I like something doesn't mean it's right for you. But the way I look at trading is because of the momentum, my expectation is that the stock does this, for a couple of days. And then ultimately breaks higher. And of course, I am all over the place with my drawing. Drawing has never been my strength, even in kindergarten. That's what I expected to do. So I would put a buy stop if I was to trade the stock somewhere above the high. I probably would give it no more than 8%. It's a $8.76, so that takes me down to about $8. That's the problem. The stop is too far away if I was to look at my typical stops. I guess because it was a Morales catcher Bible gap up, I'd probably put the stop at the bottom of the wick. Too much room. That's 20% stop, so I don't like that piece. But if this thing continues higher tomorrow, I might be into that. I may look at that. So that's how I look at the market. I spend a lot of time on the market because to me, that's what matters. And if the market's up and 90% of the stocks are up, I'm going to look smart and most of the things that I like are going to be up. But if the market is down, it doesn't matter how good of a stock picker you are. When 25% of the stocks are up, what's the likelihood that this one goes up? Have an awesome day in the markets. Have an awesome weekend. Don't know if I'll do something this weekend. I'm going to be traveling, but I've said that before and I get it done anyways. Have a great one. Trade safe.